an update today because of how it ties in today with what happened last week. Last week was in the end a down week. They were trying very hard to avoid that because there had been several down weeks already. In the end, they were not able to. The market went down enough by the end of the week that they had another down week. Today, they were absolutely desperately trying to avoid continuing that trend. So the market blasted up first thing in the morning in a desperate attempt to get out of that zone again. That bounce lasted a couple of hours. It then came down hard again, and the market spent the rest of the day trying very hard to not go any lower. It made it down to Dow 33,000, stayed there for a little while, then came all the way down to zero. Then it bounced hard one more time, back up to a little above 33,000 again. Shortly thereafter came down hard again, and for the rest of the day they were just desperately trying to hang on to zero, trying to avoid going down below zero. For a while there they were well below zero, and even desperately just trying to avoid having it collapse down into the close. They did avoid that, but I could tell how desperate they were because of how volatile the trading was at the end of the day. I didn't watch it the entire day, but given what was happening, I decided to watch it at the end of the day to see how the market would react, and it was very definitely pretty wild trading on a small short-term scale because they were pushing so hard to try to avoid going down too much. And in the end, they ended up just about at zero. I want to quickly comment on that midday move yet, because I think it's very indicative and telling of what's going on too. It turned out to be an absolutely classic three-wave move to the upside, the move from zero back up to a little over 33,000, but with a catch, with a caveat, okay? In that, the initial move up was pretty weak. The corrective move within the corrective move, in other words, the middle wave, the B wave, was exceedingly weak, small, tiny, okay, and with a downward bias, okay? But they were so determined to get it back up again that the C wave, relative to the B wave and the A wave, was really quite big. They punched it way up, relatively speaking, got it to above 33,000 again for a short time, but then that wave, which was proportionally too large, out of whack in size to the previous two waves, ran out of steam, and a few minutes later, as I said a couple of minutes ago, the market came down hard, right back down again to zero, and then eventually ended up well below zero yet too, but they managed to punch it back above zero again, but it came right back down again, back up again, back down again, and not in small measure either. It was pretty big moves for an intraday move, for a more or less normal intraday move, okay? So the bottom line is the trading for today was mainly focused on desperately trying to avoid not going any lower. And in the end, they ended up right about at zero. Basically, it amounted to they were desperately trying to keep the Dow above zero. They were desperately trying to keep the S&P 500 above 4,100, and they were desperately trying to keep the NASDAQ from going below 12,000, and especially closing below 12,000. And then that final move down later in the day, they actually did end up with the NASDAQ just about at 12,000, which is probably why the push back up was so strong for a short time, because they were so desperate to get out of that range again in the process. Couple more comments about other related markets. The European markets were up substantially today, bearing in mind they close a while after the American markets open. The German market in particular was at the high end of the recent range. The up opening in the American market this morning helped boost the tail end of the European market trading day. The German market made it to new near-term highs in the process. Hooray, hooray! The problem is that almost as soon as the German market closed for the day is when that initial big down move in the American market happened. So the rest of the move today down back to zero is not reflected in the German market yet. Moreover, interest rates, which as I think I noted last Friday, the 10-year Treasury was back above 2.9% by the end of the week last week. It shot up this morning, almost straight up, to and then through 3%, okay, as the morning progressed, which is probably part of the reason why the American market came back down again after a couple of hours, okay, and the interest rate closed substantially above 3%, and the oil market, the American oil price, also ended up back at $120 a barrel and only made it down slightly to about $118 a barrel over the course of the day, which is still several dollars higher than it was just a few days ago. Okay, so the overall circumstances are not being helpful to the situation at all, which is probably why the traders were pushing so hard this afternoon to try to avoid collapsing well below zero yet by the end of the day. Because the conditions overall in the situation were such that that was a possibility. It was likely to happen if things had gone the normal way. But you know, it is an unusual market overall in modern times, and that's reflected in what was going on this afternoon too. We'll see how well it holds up tomorrow. Okay. Also see how well the European markets hold up tomorrow, especially given the overall situation that's going on in Europe right now, and I mean economically and financially. I'm not even talking about directly about the situation in Ukraine. I'm talking about the consequences for Western Europe, financially and economically, of the situation in Ukraine, which are not helping Western Europe at all right now. In other words, part of what I'm saying by that is I think the up move today in the Western European markets was out of sync with what is actually going on over there. It's expressing over-optimism. But we will see how that plays itself out over the next few days. At any rate, I'm once again pointing out it is not a strong market, okay? The end of day numbers don't so much reflect that right now, but the internal dynamics of the market during the day do. We'll see how that continues over the next day or two.